So you're wondering what happened to Carvana. Well, a quick little Google search will show that their stock plummeted a few days ago. I mean, some of these headlines are just not good. Look at this. Loses 27%. Is the stock still safe to invest in? Well, who really knows? They had one of the largest single day drops of the year with 38.95%. I mean, they got absolutely wrecked after they came out with their earnings. But at least their year is getting, better, right? Like they can't be down that much on the, oh, never mind. At least their options are good though. I mean, look, up a lot. So, what really was the big news? The big news was their revenue and their earnings per share. Their revenue was estimated to be 3.69 billion, and their actual came in only 3.39 billion. They missed by 8.34%, which, when you're talking about investor sentiment and you want them to turn around and invest in your stocks, this is not what they want to see. And the next is their earnings per share, and this came in estimated at $1.91, and their actual was $2.67. Once again, another miss by over 30%. That is just not good. If you are looking to have a good rest of your year and really get people investing in your stock, it's just not what people wanted to see. And as you can tell, it had one of the largest single day drops of the year. So you might be wondering, what is EPS or earnings per share? And really, it's the revenue divided by the company's common shares. So Carvana is losing money per share, meaning it's not profitable for their shareholders. And they miss this by a lot. I mean, they're losing about $1 per share. So when you have hundreds of millions of dollars out on the line and you have hundreds of thousands of shares, people are not going to want to buy them if you're losing money on their investments. And the next big one is revenue. So revenue is just income earned by the business, right? So the way Carvana makes money is by buying used cars, turning around and selling them for more they bought it for. Well, Carvana only had 3.39 billion and it cost them 3.49 billion, and they were supposed to post their earnings way above this. They missed it by over 8%, which means they're just not earning revenue, and it's far below what market analysts and mainly what investors wanted to see them earning. So you might be asking, why the troubles, right? Why are they having so much trouble financially? And that's because they bought too many cars during COVID. They were paying these high prices. And even any dealership will tell you, if you're trying to sell your car, go to Carvana. They'll probably give you more money. And right now, they're stuck with over 70,000 cars in inventory. So they have these lots and lots of cars that they paid way over market value, and they have to turn around and try to sell them to us over market value, which is over what they paid. And they can either sit there and take this loss, or they can turn around and continue and try to sell them where they're not going to sell. And that's a choice they're going to have to make. Normally, what happens is they post cars above market value. After a few weeks, they don't sell and they cut the prices down. And then, hopefully they end up selling. And they are making money. They are selling these cars. They're just not quite selling them at the volume they should be. And that's mainly because of them overpaying. So you might say, why are they overpaying if they know they're not going to be able to sell them? Well, they're a new company and they're trying to gain this market share, and they're trying to prove a point that they're here to stay and that they can sell cars. And the way of them gaining customers right now is just to overpay for the car. That's the only way they can get someone to sell their car to them, is to give them a better deal. And not to mention, people, when you sell your car to Carvana, you have to pay tax on that. When you go and just trade in a car at a regular dealership, you don't have to pay tax on that. So another thing Carvana offers is you sell your car to Carvana, you sell your car, they buy it from you, and then you buy a car from them, right? So it's the same as a dealership, except it's just all used cars. And their main issue they're going to have to get over is just this 70,000 cars they've overpaid for this in like the last year. And their letter from the CEO did not help. He basically said, yeah, we have operating losses and we're going to keep losing, and we're actually looking towards a worse next part of the year. So, again, the CEO did not really come out and give any positive statements about what they're looking forward to try and turn this company around. And investor sentiment went way down. It just left the building. They're gone. Everyone sold the stock. It was one of the highest volume selling days for Carvana and really just stocks in general. And it's mainly because the CEO had no positive words to say. He didn't come out and give any confidence to people that were holding Carvana like stocks at all. So you might say, what are the important notes moving forward? Well, the important notes is they recently acquired ADESA, which is an auction place for cars, and this is just another source of revenue. Granted, they did spend $4.4 billion trying to get this revenue, but looking towards the long run, acquiring companies is normally a good thing. You're buying cash flow for years to come, or you're buying an inventory, or you're buying customers, right? ADESA has already proven that it can be a company that can turn a profit, and that's what Carvana needs. Now, did they overpay? That's a different question. Will it end up hurting them in the long term? Like, no one really knows the answers to these questions, but at least they're trying to diversify this revenue and bring in a little bit more cash flow to this company. And hopefully they end up turning it around and they can go from buying cars to selling cars on this auction, and it really turns around for them. So, my final notes for Carvana is really on money management. I think that's the only way they can save themselves. They have to lower their costs. They might have to lay off a bunch of people, which I see coming in the future. I don't think they're going to be able to keep all of these employees. So they got to lower these costs. And that's mainly talking about their operational costs. That's their buildings, their cars, employees, their sectors that they're in. All of these are going to have to get cut down. And the second thing is they're going to have to raise their investor sentiment. They're going to have to make people believe they can turn this company around because your shareholders drive your stock. You could have the best company in the world. You could make $1 billion with no debt. You could have returning customers. And if you come out and you're not a good company and you're not in the public eye, people aren't going to pay attention and your stock price isn't going to follow. So whether or not Carvana really turns their stock around really comes down to the investors and the shareholders. And they're going to have to make them believe, yes, I want to buy this stock again. And it's not anything to do with how good the company is doing. It has to do with, do they think it will do better in the future? And right now, Carvana has not led investors to think they're going to do any better in the future than they're doing right now, which is losing money and losing more money. It's costing them more money to get inventory, and they're selling them for less and for lower amounts of money. And the third thing is they're going to have to innovate. And you saw this with the purchase of ADESA, right? They tried. And I think it was a great purchase, personally. They paid a little too much, but that's for them to decide, not me. But they're going to have to get innovative. They're going to have to somehow make themselves popular again. And at first people were like, whoa, I can just go to this place and buy a car, and you don't have to deal with necessarily like the dealership. It seems so easy. You just walk in, right? They had the car vending machine. They've been selling that for years. Well, it's kind of old now, and I think a lot of people are seeing through the fact that they're just paying for cars overpriced to get your business, and then you don't really end up coming back to them to buy a car. The only people buying cars from Carvana are probably people selling a car to Carvana. So you're just buying a car over market price for selling it over market price. And that's where people are kind of getting mixed up in this cycle. And that's why Carvana might be dropping off a little bit. So they just need to get a little more innovative with what they're doing and really just make people believe. They don't have to change the industry. They don't have to do anything wild. They just have to do something that is making people believe they're an innovative company again, right? And every time these like quarter or yearly earnings come out, they just offer the same information, right? This is how many cars we bought, this is how many cars we sold, this is how much money it costs us to acquire it, and that's about it. They really need to start driving home the point that they're going to do something different than just putting up their cars online, right? And they need to start showing this really in their advertising budget because they need to reach the investors again and make these earnings and quarterlies, like they need to make them a bigger deal and come around and say, hey, this is what we're doing as a company. this is where we're going, and this is why it's going to be 10 times better than it was last time. But thank you. Hope you guys enjoyed this video. Don't forget to like and subscribe.